The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another excellent edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host, the Koala Bear of Wall Street. Maybe it'll stick if I just keep repeating it long enough. Anyway, we're going to have a great day out here. And I'm looking at a market that is up, off its highs, though, up 19 points on the S&P cash. Drove right on up to that 1,800 level. Now we're backing off a little bit. Volume has been, I would say, not excellent, but at least better than it had been in early January for some of these moves. 2.2 billion shares on the consolidated New York Stock Exchange tape as we start the show. So is it really bad? And the answer is no. Is it good? No. And am I surprised we're backing off? The answer is no. We've got some earnings coming up tonight, and we've got some other things going on. But we've got a little time to rest here. So let's get right into the snooze. And we all like to always start with a little bit of history. Because, of course, if you don't know your history, you're bound to repeat it. In the year 2000, as Super Bowl gets warmed up, the Internet bubble is near its peak. 17 dot-com companies each spend $73,000 per second. Most of them had never made a dime, by the way. A total nearly $38 million during the Super Bowl XXXXIV. When are they going to get rid of that? It's going to be very difficult one day. 200 years down the line, if football's still around, what are they going to have? A bunch of X's and C's and I's and V's? And who's the last person in the world that's going to know Roman numerals? I think they went out back in the Rome days, didn't they? Everybody found out that just didn't work very well on big numbers. Anyway. I'm ready for them to go. It was good up to about Super Bowl 30, but I think we're past that now. Time to start giving it a number, a real number, not a bunch of X's and I's and V's. Just my personal opinion. But by the time the Super Bowl rolls around, at least 3 have already gone into Chapter 6 before, largely already before it even airs. So anyway, it was a time to be in the stock market. It was a time to watch the madness of crowds. And, of course, you can always check this out at Jason Zagwig's blog. And the link is always at the bottom of the page here on Tiger TV if you want to check out his blog. And he's nice enough to put these historical facts out there for us, at least in the financial world. We've been talking a little bit about Apple, and I'm going to get into Apple just a little bit more, probably talk about it at length tomorrow night with Tom O'Brien. One of the reasons I've been looking at it so hard is it hanging around here at these lows. And the reason that I am so concerned about it, let me go ahead and pull up a chart of it so we can see AAPL. Is Confluence. We've been looking at just how well Confluence has worked picking the highs and lows. And when we come back and look at it, there is just excellent levels of Confluence at somewhere between 496 and 502. And this thing, where did it get to? 496.70. I mean, this thing is right there. Now, what it hasn't done is bounced. And every other time Apple's come down, we found a line of people that have been just waiting to buy Apple. And my guess is there's an old saying from, I think, the Arthur, not Schlesinger, I'll look it up during the break. But basically, this guy had an idea that truth goes through three stages. One, it's laughed at. Then two, it's violently opposed. And then three, it's become self-evident. And basically, everybody wants to laugh at it when they first hear the truth. Then when they, it looks like it's a little more evident, they dig their heels in. And then one day, everybody just knows that, well, sorry, I guess it is true. But they'll act like it always was along. And here is the issue with Apple. And I'm going to take you through just a little bit of understanding high technology marketing. There is always the working product. When you finally get something that's good enough to hand to a customer, most products don't fail because they aren't perfect at the very beginning. They fail because they don't get revved, don't get improved fast enough to actually get into what is known as the early adopters. These are the people like me that were building computers in their basement when there weren't computers publicly available. They're dying to get at it. Some of these people are in the 3D printing market right now. But just the start of the working product sector is about 2.5% of all profits that are ever going to be made. Early adopters come along. And these guys will be somewhere around, I don't know, I was looking at it earlier. It's pretty low, maybe 8% or something like that. But anyway, the head of, or one of the head CEOs of Intel left for a couple of years and took a sabbatical. He went back and looked through all the companies in technology from RCA to any kind of technology, Ford Motor Products, anything that was groundbreaking and that really took off. And they came up with some fairly decent averages about at what point in the bell curve is all the money going to be made. But once you go from early adopters, you go to pragmatists, at least in the parlance of the CEO of Intel. And both the pragmatist segment of the market and the conservative part of the market each one counts for about 34 of the or 35% of the profit that's ever going to be made on a product. So if you put those two together, it's 70%. So what you have is people that really need the product, really can use it, and that's when you really get the ramp up. On the backside, you get conservatives. These are the people that, like me now, that tend to wait for technology to drop in price, to get revved for a few times. I look at a lot of stuff, but I know that it's going to get wildly better. It's going to get wildly cheaper fairly soon. So I'm not the guy that I was 30 years ago, buying any kind of technology at any price to be in at the bleeding edge of the market. I've gone from the pragmatist early adopter side to the conservative and skeptic side. That internet thing, I think it's just a fad. Anyway, the whole conservative part of this market can be thought of as two ways. One, until you get pretty much to the peak and even halfway through the pragmatist, the color of the product doesn't matter. The finish of the product doesn't matter. It's what it does. Is it pragmatic? Does it need to do what I need to do? If I go out and buy a hammer, does that hammer do what I need to do? Is it great to have a great grip or a fiberglass non-shock grip? And is it really nice to have that wonderful waffle pattern on the head? And is it, the absolute perfect way of pulling a nail out of a piece of wood on the back? Or is it just your average hammer? Well, in the very beginning, I'll guarantee you, any hammer was better than no hammer. Then suddenly a hammer that was made out of hardened steel was probably practical. And until we hit the top of the market, that was fine. As you come back down the other side, what you start finding out is that color starts to matter. It's now color red, yellow, blue. It is now the finish of the product. Oh, this is satin. This is that. This is that. And think about it, if you want to go back to it, it's all about, think about Model T. When you're getting going, all that matters is shipping the product. And if you get out to Silicon Valley, you'll hear the only thing that matters is if we ship. because we're going to be spending so much money. If we don't start getting money coming back in the other side, then our investors are going to dump us, and that will be it. So you've got to get a working product fairly quickly. You've got to get at least some cash coming back in the other side of the building to keep you going. And hopefully you hit this pragmatic part of the market before your product fails or no one likes it anymore, or it's the next pet.com and you go public with absolutely no earnings. But the whole idea is that once you get to the skeptical side, I mean the people that said, hey, I don't need a smartphone, when your mammy and pappy start buying smartphones and start talking them up, you're probably to the point where people said there was no need for a smartphone. And then pretty soon you're down to the obsolescent part of it. But what you find out is those tails account for maybe 13% of the entire market. And the whole part where it starts to become hot and the whole part where it starts to be more about what the fit and finish and the look of the product is than actually what it is about, what it does. When all those things become more important, you're on the downside of that market. So yesterday when I talked about Apple, we talked about the problem with them replacing a product that has 65% margins with any other product. There's only a handful of people that have that. Most of it's software. But at the same time, there's a whole other issue of replacing a product. We've got to think of Apple as a hardware and software manufacturer. What kind of piece of hardware and software will allow them to generate 65% margins over the life of a product? In fact, they're actually making about 72 once you look at them buying things on iTunes and the App Store and everything else. That 65% is radically coming down and fast. They are losing market share to Samsung and other customers, and it's becoming more about price, and that's part of the whole conservative side of the market. And it's all about those people that are been skeptics. Now, for that side of the market, we find that Google has been incredibly adept at using the Motorola segment that they bought to go after and build new phones that radically attack the third world market, where probably the bulk of the growth in that whole market is. So what I'm looking at now when we, let's go back to the chart on Apple, is this confluence level that for the most part is really probably the most important stock that we can see in this market. And it's going to be all about whether Apple breaks down through this. What you don't want to see is this thing going sideways at 496 for very long. If no one steps in, this thing breaks. It is still 15% of the market. It could take everything with it. And I don't think I'm making that too high. We've had some stocks bounce to offset it, but that's only a little bit. We'll be back in a minute.
Andy Hecht's powerful weekly newsletter, the Technomental Commodity Report, is going up in price again at the end of this month. Andy's weekly newsletter has delivered multiple profitable trades for his subscribers, even including a triple-digit winner within recent months. Right now is a perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy will also be hosting a subscriber event on Thursday, January 30th, Seasonality in Energy and Agricultural Commodities, that you can gain access to by simply signing up for a free trial to Andy Hecht's newsletter, the Technomental Commodity Report. A 30-day free trial to the Technomental Commodity Report, a free 60-minute live online webinar with Andy Hecht, which will be archived, and you lock in the low price of $49 a month should you decide to continue after your 30-day free trial. Offers don't get much better than this. Act now before January is over and this offer passes you by. Sign up for your 30-day free trial to the Technomental Commodity Report today.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC. Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now you can receive a 2-week free trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And I am back doing a little programming in the 2 minutes that I had in between the break, but always interesting. I asked Andy, I know he's in Las Vegas, if he'd ever been to Batista's Hole in the Wall. I had a very cheap partner, and one of the things that happened right after the big MGM fire, Bally's bought that hotel. Right across the street from it in this little strip mall is this wonderful little great Italian restaurant. At least it was. I don't know what's going on there. It's I guess the Gold Coast, I think, was right in front of it. But you could walk right across from Bally's right into the little restaurant, eat there big. Always full of mobsters and great Italian food, and a great deal of a lot of stars would wander through there. And this very old guy who's probably still around, I figure he's going to live to be 150 years old. He'd come over there, and he's one of these guys that would continue just to play the accordion at you until you gave him some money to go away. And always the way to make money is irritate people, and so they'll pay you to go away. Of course, accordion music, probably a rare and developed taste that I didn't find. Him and Weird Al Yankovic, two of the guys out there. Anyway, yeah, Barbary Coast. Yeah, that's it. Used to be anyway. Oh, Skipper Smokehouse in Tampa, huh? I'll have to check that out too. Anyway, we were talking about Apple, this thing bouncing around at these lows. Of course, we're at 1793 on the S&P cash, up just a little under 20 points on the S&P cash, 2.3 billion shares. Again, the volume really kind of slacked off here in the last hour and a half, 2 hours, and we started pulling back, looking at these earnings tonight. So I think I'm done with the news. Maybe not. Let's take a quick look. Yeah, I'm done with the news. So what I wanted to start looking at was some of these other stocks and see where the highs and lows were possibly going to be if we came back and looked at these long-term charts. Now, Chipotle is going to come out after the bell tonight. Now, actually, this is not a bad-looking chart if you were just buying it and thinking that it had pulled back to where it had broken out last time. On the 18th of October, this thing, 18th of October, this thing gapped up very nicely on heavy volume, 2.4 million shares comparatively to yesterday's volume when it got in there. It was 650,000 shares. So support probably around that 480, not surprising this thing bounced a little bit today. But what you do have is all the way to that gap open, which will take you back down to about 432 on the downside. And you've got, while not a good confluence zone, you do have one. It's way too wide to act like anything more than congestion. It's not going to act like support. It is going to act like a highway that's got just a few too many people on it at rush hour. You're going to get there. You're just not going to be happy about it, and it's going to be slow. Probably like going through Atlanta last night. But that's it. Now, on the top side, you do have a high volume high at 548.14. What we have seen over the last few days is a lot of people have gotten very, very short a lot of these stocks, and we're going to go through some of these that popped in the last few days. But I would not be surprised on good earnings to see this thing move back up to the 550 range, and on bad news back down to that 430 range back, and at least fill this gap that we had out here. It's so hard to see what these Chipotle guys have done. I remember Basil getting a good score on Chipotle. I've hit it a couple of times. It does have a tendency to get very, very stretched out and then come back to earth. I'm not much on this whole they're long on the bull. Let's just put it that way. Food with integrity. We're not going to use any modified foods. Well, if there's no food, I'll guarantee you they're going to be eating genetically modified food fairly soon. And it is going to be a problem with them because it is getting harder and harder to get. Maybe Andy can comment during his show about genetically modified foods. But the problem is that they are better, and they are just through natural selection starting to bleed into the rest of the non-genetically modified food stocks, and I think maybe just a losing battle out there. Anyway, we're going to look at Google, we're going to look at Amazon, and some of the others when we come back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
I take my ears and my eardrums at risk anytime I'm in any bad music because just like a fly drawn to horse droppings, these engineers can go and find it. We're going to talk about Google in just a second, but I did meet, we were talking in the den here about meeting different people, and I've met both Henny Youngman, and I met Rodney Dangerfield, which is a story in itself that is not consumable for general public. I did bump into Henny Youngman in an airport, and he did ask me, he said, hey, have you seen a new picture of my pride and joy? I said, well, no. He says, would you like to see it? So he gave me a card, and he signed it, but it was literally a picture of a Pride furniture wax and Joy dishwashing liquid. And, pretty funny, it's a basic groaner out there. But I've always kept that card. And anytime I want to irritate any young kids, I've got that picture on my smarty phone now to flip them and, hey, you see a picture of my new Pride and Joy? Always a good groaner. People don't enjoy these really groaner jokes anymore like they used to. What can you say? Anyway, we were talking about other stocks like Google. One of the questions in the den is, does Google have any of the same problems that Apple has? And the answer, if you're a monopoly, is no. They still have 78% of the search market, maybe 75% now. Microsoft has been good at least getting in on the edges of that business and keeping them honest. But we've seen a huge move in Google today. They sold part of the division. They bought the Motorola division for $8.8 billion, mostly to get a patent portfolio. Not that they wanted any part of Google. They spun off the part that made radios for cop cars and all that stuff already. The idea was to try to get rid of the rest of it. And, of course, they're going to be selling that for, $2.9 billion. Now, the reason that Wall Street has jumped head over heels on it is just how much better this is going to make Google's earnings look. We've talked about Intel. They've got products making 65% margins. When they sell, a video card or a network card that's making 20% margins, it makes their whole business look like it stinks because it brings the net margins down all over. Even with the network cards and the other things they sell, for the most part, they're still in the 50s and 60% margin range at Intel. It is a license to print money. Now, Google has a license to print money just because if I'm probably going to go to Google 50 times, 100 times a day to do research, look at things, try to find out about what's going on. But what we have is pretty much the same thing in Google. My guess is that the business is so transparent, everybody knows what they're doing, that at the margins, could they give us a prize? The answer is yes. Is it going to be a huge miss? The answer is no. It's either going to be a little bit better or a little bit worse than everybody thinks it's going to be. And could they start rolling back over here? Yes. But you don't. The last thing I want to do is be shorting a Boeing or a Google or someone that has a very easy to understand business where you're going to have to figure out why these guys are losing market share. And I can't see anything out there that tells me that Google's losing market share any significant way to Microsoft's and Bing, or that their prices are being attacked and their margins are starting to drop. I think that their margins are doing okay. And you're just not going to see a lot of differential in a business. Now, they've got all these self-driving cars, and Amazon's talking about flying things around with drones. Those are all good and well. But 90% of all the profits that come to Google, 92 are all about its search engines. 8% of it is discretionary in different businesses that are getting into. The old saying is that if you don't put some ships out to sea, your ship's never going to come back in. And that's exactly what they're doing. They're looking at other kinds of things like Google Glasses, like trying to find out other ways to monetize their search and search knowledge in the business. But it's not a hard business to figure out. If the general market pulls back, if the general economy pulls back, they're probably going to pull back in league with it. But it's not going to be like everybody leaves search. Most people do sit behind computers during the day. They play with their tablets on the nights and the weekends and at the coffee house. But maybe you're on the road taking orders on a tablet. But if you're sitting in an office, why not have a big monster screen like I have, or 3 like I have in front of me, and probably 4 more in this room, and doing a lot of Google searches. The biggest problem Google has had has been the reduced price that they get for search on those tablets. So someone's looking around, someone's doing Google Maps, and they want to go somewhere. There isn't a lot of extra space. So Google does make about half the money that it makes on desktop searches on tablet searches. So as more of that business comes on, if any kind of weakness is there, it's going to be Google's, but they're still getting the business. There's still nothing better than Google's voice search. You hit it, it goes bing, and it says talk now, and I say I want to go to Sam Ash recording, and boom, it gives me the maps and everything else, and it's so easy, and it gives me turn-by-turn instructions, and of course, all I had to do is speak the language, and almost always it is right. It is much better than Siri's interface for search. So can you get a surprise? The answer is yes. Is it going to be at the margins? Also yes. And my guess is that they're just going to probably go to about 1150, and that'll be it. I have a feeling that this is going to be not a surprise in the marketplace. If we are looking for surprises, I think it would come from Amazon and potentially CMG, much more into having problems at a retail level than Google at an industrial level. Remember, Google's not making money out of you. They're making money out of other businesses. And especially if those businesses are online, they're kicking money back in some form or fashion to Google for AdWords or all the other stuff that's going on out there. And, you know, why they may have some patent liability, my guess is that's not going to be paid, if ever. And if it is, it's going to be 15 years down the road when they've litigated it to the absolute living death. And maybe the people that have actually filed the patents have already died. And maybe they just go away. And that's how big business does it. But these guys are looking very hard at finding other high-margin businesses. They don't have blinders on. And it has been, I think, 2 years ago in the middle of the summer, Steve Rhodes asked me when he was subbing for Tom on a Friday night if I was going to buy Apple, Google, or Microsoft, which one I would have bought, and it's Google, and the answer still hasn't changed. I know I wouldn't buy it up here, but it is still the best run company. They still follow the rules of innovation better than any other company out there. The one downside that they do have is that 92%, I think, of their income is so focused on one thing, and that is that whole desktop or other kinds of search. It would be nice if they started to get a few more legs on the stool, but I don't see any problem with their unicycle right at the moment. So wanted to take a look at Amazon. Now, Amazon is just when we're talking about stocks I wouldn't short in Google, AMZN. The one that I would want to short the day that it actually posts a profit is Amazon. And the reason is this thing is just monstrously unpriced. And yesterday when we were talking about the Fed decision, I played a small segment about how nobody knows the value of anything from Jim Grant because the market is distorted. And my worry is that Amazon is hugely distorted. If you gave it even, let's say the profit margin that you get at Walmart, it would be about $150 stock. If you up that to 3% better than margins that Walmart can carry, and so you go to about 9% margins on all the stuff that they do, you're going to find out that the stock would be around 210. So at even a wildly 50% optimistic level of margins for bringing back stuff in, Amazon is the low-hanging fruit. Now, the question is when this thing cracks. My guess is it's the first day that they actually declare a profit and they have that wild PE of 500 to 1, and everybody starts saying, well, now what can they really make out here? Let's say that they make 9% margins, which would be astronomical in all of retail for being that large and moving that much stuff around. The question also would be potential competitors. Walmart really getting into this side of the business and going after them. They have a great deal more locations than Amazon does. They've got an entrenched and well thought out distribution plan, even better than Amazon's, for getting products to locations just in time. If Walmart wants to go into the business of being a seller of everything, they could be formidable to Amazon. I think one of the reasons why Walmart has not so far is just that. they're going to get into business making little or no money to go after Amazon. And strategically, it might have to be a decision they make. But how are they going to do it? Amazon is the one company that's been allowed to make no money forever in the thought that just eventually one day that they will make money. Well, if they made 50% more than anybody thinks that any retail outlet could, they're still worth only half of the value that they are today. And of course, everybody, they're going to just keep growing and growing and growing. Twice nothing is still nothing. And until you start making profits and, putting that money back to the shareholders, as far as I can tell, it's just a giant pyramid scheme. We won't know what the profits are until they start making some, and we can go figure it out. At least that's my... Really, CRM is 74% short? Okay, well, let's take a look at that. I'll have to check that out during the break. CRM. I did see some comments today from Larry Ellison at Oracle about the CRM being its big company, biggest competitor now. And certainly I don't like this thing of being up here at previous highs with very light volume. The November 18th high, $58.37, has been, 15 million shares. So did you get anywhere close? You got almost 9 million shares on the 15th. And see if I get anything up here that looks anything like 15 million shares. And the answer is no. So could you get a breakout here if things really did well? Yes. My guess is this thing's probably, after earnings, probably going to be headed back down to this 54 level, which looks like a fairly decent level for its confluence level. So I don't think you're going to get a blowout in this thing. I do think it looks to me very stretched, at least over the last few weeks. And I know Oracle is going after them. One of the things, if you get into Silicon Valley, is you'll find out Larry Ellison of Oracle was and is the most competitive man ever to be in Silicon Valley. And he has a few things written, and I got to take a drink here just a second. But one of the things on the wall in his office is a plaque. It says, "It doesn't matter that we so much win as others lose." And my guess is that he'll cut costs or do whatever it takes to hurt CRM. They are locked in what is going to be a life and death struggle. At the same time, we've got Amazon kind of coming after Salesforce too. So very interesting, incestuous business out in California. But could they come out with wild earnings? It could be. My guess is that this thing's coming back around to that $54 to the high $53 level after earnings tonight. But we'll have to see what they say. The big problem with earnings always is, do they hang out and shove a little of that business that should be pushed into the next quarter, into this quarter, make it look just a little bit better? There's always the temptation in a big business to do that, and that's why we have to wait for what they say, and then maybe you have to short them after earnings. We will be back in just a minute. You can always give me a call at 877-927-6648, or you can email me at path@tfnn.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's patterns, profits, and peace of mind.
And get the edge you've been looking for.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Join Andy Hecht as he teaches you how to make money in commodities. The Commodities Hour, next on TFNN.
We have been talking a great deal about Confluence lately because I was expecting some fairly deep retracements in the marketplace. One of the things you can use this on is, of course, ETFs that are commodities, as Andy will be coming back. And at least on the ENG, you've got a fairly decent range to start looking at, and that is somewhere between $23 and $22.37. You should have a support level back about that level. So it's not too far over the 22.19 high that we saw on December 23rd also. And, you know, it's a gappy little thing, so you can see a lot out here. But, you know, that would just be, you know, if you could get a 618 retracement on this last big move from 1947 up to 2705, maybe that would be a good place at looking at maybe getting back in on the bandwagon for UNG. Of course, we are at the end of January. You've got probably 45 days of cold weather left. And a lot of that gas that was probably being flared out at less expensive prices may be finding its way to a place for sale sooner rather than later. I would not be surprised to see some wild swings down, but that would be, maybe you get some light pullback into that area. Maybe that would be a nice place to hang your hat for a retest of the top. But maybe Andy will have some comments about that, along with whether or not genetically modified foodstuffs are going to be a problem for companies like CMG. And that, especially in China, I know that they took a lot of the genetically modified rice, and of course they're not supposed to replant it without paying the people that made the original investment, but they do. So a lot of that money is not coming back to the companies that actually did it, and in some countries. Certainly here in the U.S., Monsanto rules with an iron fist on corn and runs around doing genetic testing on the corn itself so people don't use it. And the rather famous case is someone coming after a farmer that some of the seeds blew onto his property. And in a fascist-like manner, Monsanto went and destroyed the gentleman. But it is it's going to be an issue. I'm just wondering if long-term, if these companies can say we won't be, we'll only use non-genetically modified grains and be able to live with it, much less genetically modified beef and chicken. I think you might be able to stay away from the hormones, as long as someone will grow chickens for you without the hormones. But the rest of the stuff, it may just be too expensive, and bit by bit chip away at that marketplace. Anyway, we're looking at a market out here that's up 20 points on the S&P cash. Like I said, volume has tailed off dramatically in the last few hours. We're just up to 2.5 billion shares on the consolidated New York Stock Exchange tape with an hour left in the day. It'll be interesting to see how this does close off. A lot of my short positions, I had about 8. I had stopped out of one mid $30 range for about a loss of $1 on it. But other than that, the rest of them are all looking good. No reason for me to cover them yet. I plan to sit on my hands for a great deal of time on many of these. And the question is whether or not we're going to get some kind of other news really drive us higher. In the meantime, I hear my stalker swimming around. Yes, he is. It's Andy Heck. In the meantime, remember to sell when you can, not when you have to. And I'll see you here tomorrow. Same bat channel, same bat time.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.